All the time, I see homebuyers getting tricked by loan officers who are trying to win your business. They're quoting rates people can't qualify for, they're underestimating monthly payments, and they give what seems like an amazing quote. Then, homebuyers go out and they shop for homes, and they don't realize until after they get under contract that all of a sudden their payment is way more than they were expecting. And here's the worst part. By the time you figure this out, you're already emotionally attached to the house. You spent money on inspections, and backing out feels impossible. So today, I'm going to show you the four most common tricks that bad loan officers use to win your business, and more importantly, exactly how to protect yourself from each one. If you stick around to the end, I'm going to give you my complete checklist for making sure that you're not getting tricked. So number one is the discount bait and switch. So the trick here is that loan officers will quote you a low rate program without checking if you qualify. Okay, so there are programs called Home Ready and Home Possible. They're a type of conventional loan. And so what happens is you qualify for these loans and you get a lower rate and a lower mortgage insurance payment, meaning a lower monthly payment, if you're under 80% of the area median income. And so what happens is a lot of loan officers are quoting these programs without checking your income. So what happens is they say, okay, we can get you 3% down, which is on Home Ready. You can also get that on a normal conventional loan, but they're quoting you with a lower rate and lower mortgage insurance monthly. So they're quoting you a Home Ready, Home Possible program that you would only qualify for if you were under 80% of the area median income limit. Okay, so you get excited and you start house hunting. And then when they finally check your income, you get hit with a, sorry, you don't qualify. Here's a regular conventional loan instead that has a higher interest rate and higher monthly payment because of the higher interest rate and the higher mortgage insurance. And now you've already found this house. You still want to move forward with it, and you're kind of locked into the higher rate and fees here. Okay, so what I want you to watch for in this is if you're getting a pre-approval and there's no income verification up front, that's a red flag that it's very possible that the quote that a lender is giving you is something they can't follow through with. Also, if your loan officer is reluctant to explain the loan type that's being used. So Home Ready, Home Possible, amazing programs. If you can qualify for them, again, they're just a conventional loan, but when you have under a certain income limit, you get a better rate and lower mortgage insurance. But again, keep that in mind. If a loan officer is not looking at your income, they can be showing you the rate for this program, even though you don't qualify for it, and they don't know that until they get your income documents later. So what I want you to do is when you're talking with your loan officer, only rely on a pre-approval where a lender has checked your income. There's so many websites online that want to give you a pre-approval in like 3 minutes or whatever. That's fine. That might give you a general idea, but it's not something that you can actually have confidence in to go shop for a home and know exactly what you're going to be paying. Now, keep in mind, not all lenders are out there to trick you. Now, with our mortgage team, we check your income first to make sure that we can actually follow through with the pre-approval that we're giving you. So if you'd like a pre-approval that checks your income first, you can go ahead and go to winthehouseyoulove.com to talk with our team. That way you can start shopping for homes with confidence. Now, the second trick here is the rate-only quote trap. So the trick is only providing rates in emails or pre-approval letters without a full breakdown. This happens so many times where a loan officer isn't going to give you the breakdown of all the closing costs, understanding the down payment, understanding what's going into the monthly payment. They're only showing you a rate over email. And so what you'll see is, okay, your pre-approval rate is 6.25%, but they don't give you any sort of monthly payment breakdown. They don't give you any sort of closing cost breakdown. Or I've emailed you our competitive rate of 6.375. Or as mentioned in my email, we can get to 6.125. And so everything in here, the only quote you're getting is the rate. And people are so fixed on this being the most important thing, is only looking at the rate, that they don't see the costs going with it. Okay. So this is dangerous because it doesn't show you any idea of what points or fees are going into that rate. So you might get a really low rate, but it might come with a bunch of costs as well. And so you might not realize that until you get under contract, you actually find the home and realize, oh, we have to pay thousands of dollars for this interest rate. It's also impossible to compare loans, like the true loan costs, without estimates. So many times we'll have people reach out to us and they're like, hey, this lender over here is giving me this rate. We say, okay, great, but what are they charging for that rate? How much are they charging you in fees for that rate? And they're like, oh, well, they didn't mention anything. And then they go on to realize, okay, well, that lender is charging them sometimes $10,000 or more to get that interest rate with them. Okay, it creates a false impression of a better deal than competitors. And that's why some of the loan officers will do this, is they'll only give you that rate because they know that's what feels good, is getting that low rate. But because you don't see everything else going with it, then it's easier to kind of hide that, hope to win your business. And then once you're under contract and feel like it's too late to back out, you're already kind of fully committed, and you end up working with them anyway. So the strategy here is making sure that you never rely on email only quotes. Make sure you have a full quote breakdown with your loan officer. The next, this happens so much, especially because interest rates are higher where they've been over the past few years. People are really sensitive to interest rates, and so they're point stuffing. And so this is very similar to this strategy up here, is where a lender might show you that low rate, but they're not showing you the costs with it. And this is called a point. So the trick here is focusing only on interest rate while loading up on points, okay? So for example, a loan officer says, I can get you 5.5% as an interest rate, and that seems great, right? So usually it's in an email or a pre-approval letter with no full quote. And what they don't tell you is that rate comes with, let's say, 2 points. So 2 points. So 1 point is just 1% of a loan amount. So if you have a $300,000 loan, 1 point is $3,000. So on $300,000 of a loan, 2 points is $6,000. Okay. Now, what a lot of people don't realize is there isn't just one rate that a lender gives you. You actually can choose whichever rate you want, but it comes with a cost. Okay. So when your loan officer is looking at rates, it's going to look something like this. Now, this is just an educational example. I'm not offering these rates here. But this is what a rate chart might look like. So you have in the center what's called par. So this is zero charge for the rate. This is just the base standard interest rate. So let's say that that was 6.5%. Well, the way that rates actually work is you can choose any rate you want, right? A lender doesn't choose the rate for you. You can say, I want a 6.25%, but that's going to cost you. Maybe it costs you 1.25 points. So that would be about just shy of $4,000 to get that rate. So you can do the opposite of this as well. You could say, actually, I want a little bit of a credit. And so, okay, well, maybe I'll actually have my rate increased so I get a credit at closing towards my closing costs. Okay, so this is how rates work. You can choose the rate that you get. A lender might show you one rate, but it's going to have a cost with it or a credit with it unless it is the 0 point par rate. Okay, so it's something to keep in mind, because what I've seen so often from loan officers is they show you the very bottom of the chart. They'll try to go as low as possible, again, because everyone's trained to only think about the interest rate. But again, they'll show you that quote maybe in an email and you're like, this is amazing. This lender is giving me such a low rate. All to realize later, okay, well, this actually included thousands of dollars in fees to get this interest rate. And so again, if you compared that with another loan officer who offered you the same rate, they're going to have the same thing. It's going to cost you a large amount in fees as well. So if you are looking at comparing lenders, make sure that you're considering the costs going with it, because it's not fair to just say, okay, well, I'm going to go with the lowest rate if it's going to cost you thousands and thousands of dollars compared to someone else who could also give you that low rate and it would cost a similar amount of money. Okay. So if you are comparing, make sure that you're comparing the same rate and you're looking at the costs. So the strategy here to protect yourself from this is don't just look about the rate, ask about the cost of the rate as well to make sure that you understand all of the fees associated with it. Another trick that happens all the time is the low escrow trick. So this is where a loan officer is going to dramatically underestimate the property taxes and insurance. Now, keep in mind, loan officers, they don't control what the taxes are on your property. They also don't control what the home insurance is going to be, right? You might have multiple dogs and that's going to increase your homeowner's insurance premium that maybe your loan officer doesn't know about. What loan officers have to do is they have to give their best effort in estimating what those costs are going to be. So you have a good idea when you're home shopping and when you're under contract for a home that you have a good idea of what that's going to be. So it should be kind of in ballpark range. But what we see a lot of loan officers do is they underestimate these in order to make it look like they're giving you a better deal. Okay. So the way this works is they might give you a quote of a mortgage payment. So, right, you get a pre-approval, you want to go start shopping for homes, you want to figure out what your budget is. So you need to see what that mortgage payment's going to be. Your loan officer is there to help you estimate that payment. So they give you a quote for a mortgage payment. Let's say it's $1,800 per month. Okay. And in there is $200 a month of taxes and $100 a month of insurance. So you find a home that you love. Then you realize your payment actually ends up being $2,080. So taxes were $200 higher and insurance was $80 higher per month. Okay. So sometimes loan officers do this out of laziness. Maybe they're not checking taxes in the area that you're wanting to buy. Maybe they weren't giving a full estimate of what the insurance would be. But often it can also be used maliciously to make quotes seem better than other lenders. Because I can't tell you the amount of times I've talked with people and they're like, okay, well, what you guys quoted us, your taxes were way higher than what this lender quoted us. Your taxes are going to be the exact same no matter which lender you go with. Lenders are just trying to estimate the taxes. And so what we do is we want to make sure that when we give you an estimate, it's as realistic as possible, right? So if you are looking at different lenders, you don't need to consider taxes and homeowners insurance because your lender doesn't control those things. And often what will happen is people will go with the lender that has lower taxes and insurance because it is a lower monthly payment. And they're thinking, okay, well, that lender's cheaper. They have a lower monthly payment and lower closing costs. When in reality, your monthly payment with taxes and insurance and your closing costs with taxes and insurance are going to be the exact same no matter which lender you work with. And also your taxes and insurance are estimated in your closing costs as well. Most people, when they get a mortgage, are going to have an escrow account set up. Basically, it's like a kind of a separate savings account for taxes and insurance. And a couple months of a cushion needs to be set into that account when you buy a home. And this happens with every lender. So if you underestimate taxes and underestimate insurance, your closing costs look lower with a lender who's doing this trick. And so you want to work with a loan officer who is actually looking into what are the taxes looking like in the homes, in the area that you're looking to buy in? What does the insurance look like as an average in that area as well? And so what I want you to do to protect yourself is ask your loan officer if the insurance and taxes are realistic for the area that you're buying in. Now, you should not have to be an expert to avoid being tricked. So if you want a transparent quote with a full breakdown, you can work with our team of loan officers at winthehouseyoulove.com, and we'll show you exactly what everything is going to cost up front, including a transparent breakdown of the monthly payment as well. Now, here is your checklist to not get tricked, all right? So when you're applying, I want you to keep in mind, are they asking you about your income? Are they asking for income documents? Now, often what we can do is instead of requiring your income documents, we can do a digital verification of your income where we pull it in from different data sources to validate what your income is. So sometimes we do that. Sometimes we're asking for things like pay stubs or W-2s. And so we need to know what that income is so we can quote you the right program. Because, for instance, with that Home Ready program I mentioned in the beginning, if we can get you in that program, if you're under the income limit, then of course we want to get you the best rate possible. By quoting that program, you can get a lower rate and lower mortgage insurance. However, if you don't qualify for that, we don't want to show you a quote for that because we don't want to put you into one of these tricks. Also, do they explain what loan type they're quoting? So you can ask, if you're getting a conventional loan, is this a Home Ready conventional loan or is this a regular conventional loan? Am I under the income limit for Home Ready or Home Possible? If they're not going to tell you this, then that's going to give you kind of a red flag because it may be that they quoted that program and realize, oh, we actually can't qualify that for you, and they're trying to kind of wiggle out of it. Also, do they provide more than just a rate? An email-only rate with no breakdown is not going to be something that we want to move forward with. Now, when you're getting quotes, you can ask, what's the rate and the cost in points? And you can also ask, hey, could you give me a breakdown of if I wanted to get a lower rate, how much might that cost? Or if I wanted a credit, what would the rate be if I got a credit with this program? Also, you want to compare apples to apples. So if you are comparing lenders, make sure it's the same rate and points between lenders, okay? So you want to compare one of those two things. So if you're looking at a 5.5% rate here, you also want to look at the costs. Same with another lender, 5.5%, and then see what the costs are there as well. And then also get realistic escrow estimates. So you want to ask, are these taxes and insurance amounts realistic for wherever you're looking at buying? Now, what you should receive is a full payment breakdown. So that's going to include your principal, your interest, your property taxes, insurance, and PMI. Now, remember, your loan officer doesn't control taxes and insurance. They're just giving you estimates here, but we want realistic estimates. Your lender only controls principal, interest, and the PMI with your loan. Now, you also want all your closing costs listed out. So not just roughly this amount in closing costs. You want to see, okay, what's all going into that? Because it's going to be things like an underwriting fee, an appraisal fee, You're probably going to have a credit report fee in there, title insurance, title fees. Those are going to be estimated in there as well. Recording fees, transfer taxes, your escrow setup. All of that should be listed out. Again, they're just estimates at this point, but you want a realistic idea of what you're looking at, not just a vague number. Okay. And then also a clear explanation of any programs or special rates you're quoted. So if you're getting something like a Home Ready program, you can ask for more info about, hey, can you tell me more about this? Can you show me that I'm under this income limit? Just to make sure that you're not going to see a higher rate later on. Now, here's some instant red flags. Someone says, don't worry about the details, of course. Just trust me. This is a great deal. We can figure that out later. I'll email you the rate. I know these seem basic, but these are things I've seen in emails from other loan officers where people are like, oh, don't worry about it. We'll give you the quote later, or I can't give you a quote until you're under contract, or those types of things. It's just simply not someone that you want to work with if they're not being transparent up front. If someone just wants to earn your business now and then flips it on you later, that's not someone that you want to work with. The bottom line is you deserve a loan officer who educates you, not one who tricks you. So I want you to use this checklist, protect yourself, reach out to us when you're ready, and we would love to help.